Adjustment and closing entries and important points for the preparation of final accounts. Dear students, today let us learn about various adjustment entries, closing entries and important points to be taken care of prior to the preparation of final accounts. The journal entries necessary to adjust the various accounts for the purpose of making provision of depreciation, reserve for doubtful debts and discounts, apportioning the payments in advance and bringing the outstanding liabilities into account, etc., as already explained in the previous lecture, are known as adjusting entries. Journal entries are also necessary to close all nominal accounts in the ledger by transferring them into the trading and profit and loss account, and to close the profit and loss account by transferring the net profit or loss to the capital account. These entries are known as closing entries. The usual adjusting entries may be summarized as follows. For writing off bad debts account debtor to personal accounts of the debtors who have failed. For making provision for doubtful debts, profit and loss account debtor to reserve for doubtful debts. For making provision for discount on debtors, discount account debtor to reserve for discount on debtors. For making provision for discount on creditors, reserve for discount on creditors account debtor to discount account. For providing for depreciation on any asset, depreciation account debtor to the particular asset account. For bringing outstanding liabilities into account, the particular nominal accounts debtor to outstanding creditors account, representing the expenses owing and not paid. For adjusting payments made in advance, prepaid expenses account debtor to the particular nominal account, in respect of which the prepayments have been made. For adjusting income received in advance, the particular nominal account debtor to prepaid income account. For bringing any accrued income into account, outstanding debtors account or accrued income account debtor to the particular nominal accounts, in respect of which the income has accrued. For adjusting interest on capital, interest account debtor to capital account. For adjusting interest on drawings, capital account or drawings account debtor to interest accounts. For bringing the closing stock into account, closing stock account debtor to trading account. The stock will appear as an asset in the balance sheet. Illustration. Before preparing the final accounts as at 31st December, the following adjustments were found necessary. 1. Rent for November and December at 100 rupees per month had accrued due but was not paid. 2. The annual fire premium rupees 240 has been paid up to 31st March next. 3. December wages amounting to 1200 and salaries rupees 500 were paid in January next. 4. Rupees 400 paid against an order for printing stood debited to printing and stationery account, but the printing matter had not been received by the firm. 5. Rupees 3000 has been paid for 2 years advertisement contract, of which 1 year has so far expired. 6. Rupees 275 had accrued due by way of interest on government securities. 7. The debtors balances stood at 23,000. The actual bad debts to be written off amount to 700 rupees, and a provision for doubtful debts is to be made at 5% on sundry debtors. Let us pass journal entries for adjusting the above adjustments required to be made one by one. The first one, the rent for November and December at rupees 100 per month had accrued due but was not paid. We need to pass a journal entry to rectify this error, to debit rent account, to credit outstanding creditors account, landlord account by 200 rupees. Second adjustment. The annual fire premium rupees 240 has been paid up to 31st March next. That means we paid, this payment includes 3 months more than the current financial year. So we need to pass this adjustment entry. Prepaid fire premium account debtor rupees 60 to fire premium account rupees 60, being the fire premium for 3 months paid in advance. Calculation. rupees 240 by 12 months into 3 months, which is paid in advance, rupees 60. Third adjustment. December wages amounting to 1200 and the salaries rupees 500 were paid in January. So, we need to pass this adjustment entry. Wages account data 1200, salaries amount data 500. To outstanding creditors account employees 1700, being the wages and salaries for December due but not paid. Fourth adjustment. Rupees 400 paid against an order for printing stood debited to printing and stationery account, but the following material had not been received by the firm. So for this we need to pass advances to printers account debtor 400 rupees to printing and stationery account 400 rupees, being the amount paid for printing material not yet delivered. Rupees 3000 had been paid for a 2 years advertisement contract, of which 1 year so far has been expired. That means for this year actual expense comes to 1500 only. Balance 1500 goes into prepaid expenses account. So we need to pass the following journal entry. Prepaid expenses advertisement account debtor 1500 to advertisement account 1500, being the advertising charges paid in advance for 1 year. 6. Rupees 275 had accrued due by way of interest on government securities. For this we need to pass this adjustment entry. Outstanding interest account debtor to interest account 275, being the interest on government securities accrued due. Seventh adjustment. The debtors balance stood at 23,000. The actual bad debts to be written off amounting to 700, and a provision for doubtful debts to be made at 5% on sundry debtors. For this we need to book the bad debts first. Bad debts account debtor to sundry debtors particular personal account 700 rupees, being the accrued bad debts written off. The second part, the provision for doubtful debts to be made at 5% on sundry debtors. That means we need to provide for reserve for doubtful debts account. On the 23,000 total sundry debtors, we have to deduct the 700 towards bad, and on the balance rupees 22,300, we need to provide 5% reserve for doubtful debts. Profit and loss account debtor 1115 to reserve for doubtful debts 1115, being the provision made for doubtful debts at 5% on 22,300. Now comes to closing entries. We need to pass the following usual closing entries. 1. For transferring opening stock, purchases, wages, carriage inwards, etc. to trading account. 2. For transferring sales to the trading account. For transferring all expenses and losses to the profit and loss account. For transferring all incomes and gains to drawings to his capital account. For transferring opening stock, purchases, wages, carriage inwards, etc. to trading account, we need to pass the following journal entry. Trading account debtor to stock account, to purchases account, to wages account, to carriage inwards account, being the entry to close stock, purchases, wages and such other accounts as transferred to trading account. Second closing entry. For transferring sales to trading account, sales account debtor to trading account, being the entry to close the sales account. Third entry. For transferring all expenses or losses to the profit and loss account. Profit and loss account debtor to each of the various nominal accounts representing expenses or losses, being the entry to close all expenses accounts. For transferring all incomes and gains to the profit and loss account, various nominal accounts debtor to profit and loss account, being the entry to close all incomes and gains accounts. For transferring net gain to capital account, profit and loss account debtor to capital account, being the entry to close profit and loss account. For transferring net loss, if any, to capital account debtor to profit and loss account, being the entry to close the profit and loss account. For transferring proprietor's drawings to capital account debtor to drawings account, being the entry to close the drawings account. Now let us discuss some of the important points in working of problems. Freight, carriage inwards, dock dues, duty and clearing charges, farm and additional cost of the goods purchased and should always be shown in the trading account. Trade discount. As a rule, trade discount is not found in the trial balance in as much as it is usually deducted from the invoice amount, and the purchases or sales entry is made of the net amount only. If, however, such an item appears in the trial balance, the same should be shown in the trading account as a deduction from purchases or sales as the case may be. Thus, the credit balance of trade discount would be deducted from the item purchases on the debit side of the trading account and vice versa. Depreciation of assets. The rate of depreciation on assets must be calculated with due regard to the period covered by the final accounts. Thus, if 5% depreciation per annum is required to be written off furniture worth 2000, and if the accounts are for 6 months only, 50 rupees should be charged to profit and loss account. Interest on loan. Where the trial balance contains an item of loan carrying a certain rate of interest and the item interest does not appear in the trial balance, the same must be provided for even if there is no mention about it in the adjustments. If only half year's interest appears in the trial balance and the accounts cover a period of 1 year, the other half year's interest must be provided for. Bad debts not included in the trial balance. As a rule, the item bad debts appears in the trial balance. Occasionally, however, a certain amount is required to be written off as bad debts by way of adjustment. It must be noted that in this case, the amount of sundry debtors to be shown in the balance sheet would be reduced by the amount of bad debts. Where a reserve for doubtful debts is also required to be provided by way of a percentage on the debtors, the same must be calculated on the net amount left after deducting the bad debts. Depreciation already written off in the trial balance. If the item depreciation figures in the trial balance, it means that the corresponding amount has already been deducted from the asset in question. In this case, the asset must not be shown in the balance sheet, thus depreciation, but must appear at the same figure at which it stands in the trial balance. If, however, it is desired to show the asset less depreciation, the depreciation amount first be added to the asset figure and then shown against by way of deduction. Closing stock in trial balance. Ordinarily, the closing stock figure is given outside the trial balance by way of an adjustment, in which case it has to be shown on the credit side of the trading account and also as an asset in the balance sheet. When a trial balance includes the figure of closing stock and that of the gross profit, it means that the trading account has already been prepared and the closing stock under such circumstances would then only appear as an asset in the balance sheet. Loose tools. Sometimes the opening stock of loose tools is found in the trial balance and the value of loose tools at the end of the financial period is given in the adjustments. In this case, the difference between the opening and closing stock may be treated as depreciation on tools and should be charged off as such. Alternatively, these opening and closing stock figures may be dealt with in the same manner as the stock of goods and may be shown on the debit and credit side of the trading and manufacturing account. Stores consumed. Sometimes a trial balance includes this item and it will then appear in the trading or manufacturing account. A store's account is debited with all consumable stores purchased and no entries are made in respect of such stores issued to and consumed by the works. At the end of the financial period, the stock of such stores on hand is actually counted and valued at a cost and debited to stocks of stores account and credited to the stores account. The difference between the debit and credit side of the stores account will now represent the value of stores consumed. In this case, the same trial balance will include the figure of stock of stores which must appear in the balance sheet. Manufacturing expenses or charges should always appear in the manufacturing account. Where no separate manufacturing account is prepared, the item will appear in the trading account. Depreciation on additions to assets. This should ordinarily be ignored unless the dates on which such additions to assets were made are given, in which case depreciation for the proportionate period should be calculated. In the next lecture, we will discuss about profit and loss account.